You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again with Twifo, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is from futures options trading and trending and analysis and unusual activity, all sorts of fun perspectives. My name, of course, Mark Longo from theoptionsinsider.com. as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Remember, if you do like what you hear, keep rating and reviewing. It really does help new folks continue to discover the content out there. And we have seen an amazing upsurge. I mean, Twifo has always been popular. It has been on a steady trajectory, but even again, towards the end of the year, we saw yet another upswing in listeners out there. So folks are clearly discovering the world of futures options out there. So if you do like what you hear, do keep rating and reviewing. It clearly does have an impact on how many folks are discovering the content out there. Of course, this January marks our 16th anniversary out there from the early primordial ooze days of launching the first options podcast, all the way now to 16 years later. We can drive now. With the network and so many shows covering all different aspects of the option space. Thanks to all of you out there who are new listeners, as well as all of you who have been along for the ride somewhere in between those 16 odd years. We love you all. Remember, of course, if you do like what you hear, you want to go above and beyond, you want, let's say, a couple of hundred extra hours of exclusive content, including great pro Q&As and everything else, theoptionsinsider.com/pro is the place to go to learn more. As we welcome on our first guest here for the new year here on Twifo. If the technology gods are smiling on her, let's see if we are joined once again by Miss Carley Garner, the senior analyst and broker over there at DeCarley Trading. Carley, are you there, madam? Can you hear me?
I am here, but we're old school with telephones.
Yes.
I'm here.
The magical technology known as telephone. Isn't it amazing? At the end of the day, we have all these bells and whistles at our fingertips, and yet at the end of the day, the old copper wire still works the best sometimes.
Yep. Sometimes it does. You're right.
Well, Happy New Year to you. How are things at DeCarley to kick off the new year?
Thank you. Appreciate it. Actually, still trying to get back in the swing of things. Holiday markets are still kind of in effect. Low volumes are a little on the light side. Markets are trying to keep up from positioning. Traders tend to make big decisions at the end of the year or the beginning of the year, and sometimes it messes up markets a little bit. And so there's some price distortion and some volatility, and we're just trying to work through that. But all in all, not so bad.
Well, we'll ease you in here on the show as well. It's been a little while since we've chatted with you, and obviously we haven't chatted since the end of last year. So let's start there. Last year was a pretty tumultuous year by just about any way you want to cut it. Of course, the invasion there in late February really just sent things into a tailspin across a variety of the markets that we track here on Twifo. So Carley, for you, looking back at the crazy topsy-turvy year that was 2022, what really stands out for you as you look back on last year? Which products, which markets, which trades, which developments really resonate to you?
Well, obviously, I agree with you. The volatility was off the charts last year, which for a select few traders might have been a great thing. I would venture to say most people probably did not, came out with some bumps and bruises. It probably wasn't a great year for most people. The thing that sticks out at me is earlier in the year when Russia invaded Ukraine, all the headlines and all the accepted premises of the markets were wheat, crude oil, and natural gas were the ones to be long. Those are the markets that were going to pick up, appreciate because of all the crazy things going on overseas. And if you look at a heat map, those are actually commodities that underperformed relative to some that were under the radar. For example, soy meal had a good year, orange juice, lumber. So on the surface, the markets you thought might have done very well actually were the dogs.
Yeah, you're right. So much of the focus early on was nat gas, crude, and then wheat subsequently there. And then, of course, the impact on the equities. Everyone talked about that. But you're right. Some of these other lesser herald markets getting a little bit of interest, a little bit of love out there as well. So a lot of fun stuff to break down as we keep on rolling, listeners, into the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, buddy, welcome to the Movers and Shakers, the portion of the show where we break down everything, lighting it up to the light side and to the dark side over there at CME Group this week. Carley, this is your first appearance for the new year. I think you remember how this goes, though. Where should we start here for our second show of the new year? To the light side or to the dark side?
First of all, I want to clarify. A minute ago, I mentioned lumber was a top performer. Obviously, it wasn't. So I don't know where that came from. That was a brain hemorrhage. But let's go to the light side.
To the light side we go, looking at the green. That is a good choice this week because the graph is pretty heavily to the green this week. If you want to see the full chart for yourselves, listeners, if you follow us on Twitter, if you follow CME Group, they always tweet it out right before showtime. You can see exactly how we're shaking up from a movers and shakers perspective. That is one of the few premium reports you guys get access to over there at Bantix because we love you folks. If you want to kick the tires on the rest, and you really should, if you want to check out these markets and learn more, it's kind of the only place to go for a lot of these analytics. Bantix.com, Bantix.com. Click on the free trial link to get started. Checking out Quick Strike for yourselves. You can see that Movers and Shakers report and a whole bunch of other fun stuff that we really don't have time to squeeze into the show here today. But it is very heavily biased to the green this week. Number 5, let's see how many of our frequent offenders are popping up this week. And number 5, we're already in it with Bitcoin up 8.31%. That shows you how rocking it is to the green this week, listeners. Anything below 8% doesn't even make it into the top 5 this week. That's a rocking week. It was number 1 last week. And again, to kind of show you what a difference a week or two makes. The last time it was number 1 with only 2.78% to the upside. Now it is number 5 and up 8.31%. So kind of a shifting narrative over the last couple of weeks. A few weeks ago, anything that was green was lighting it up and dominating our tape. This week it takes a lot to really make it into the top 5. Number 4, RBOB up 9.17%, followed immediately, staying in that energy complex, by heating oil up 9.38%. Heating oil was number 2 in the other direction last week, off 8.89%. So a rocking couple of weeks for heating oil, down almost 9%, up over 9%. So a lot of action out there. Unfortunately, we've touched on it before. Not a ton of options paper in either RBOB or heating oil, so kind of hard to sink our teeth into there. But maybe we can hang out in energy and some of the other related products that do tend to move out there. Number 2, it's our old friend copper, up 9.72% over there. And then number 1 with a sizable bullet, another one of our frequent offenders here, lumber, up 14.76%. It was number 5 in the other direction last week, off nearly 6%. So lumber, true to form, is just starting off the year hot and heavy, off 6%, up nearly 15%. Man, this thing can move. If only it put up some options paper to go along with it. Then we'd be all set, Carley. All right, to the dark side we go now. Like we said, kind of hard to scrape together a bottom 5 this week. It is mostly green on the screens. Number 5, we have the Swiss franc USD. That shows how close to the bottom of the barrel we are scraping. The Swiss franc makes it in with only off 0.74% this week, followed by, what do we got here? I think we have a little bit of a mix-up. There we go. And then the 2-year for number 4, off to the rates complex, off 0.56%. Then number 3, we have feeder cattle, off 0.99%. Yeah, I think that Swiss franc should actually be coming in there at number 4. These got inverted. There we go. Swiss franc at number 4, off 0.74%. And then the 2-year, number 5, off 0.56%. A lot of numbers flying around, listeners. Sometimes they can get misplaced. Number 3, feeder cattle, off 0.99%. And then Chicago wheat, off 1.37%. And our number 1 dark side mover, again, I told you it was a light dark side week, KC wheat, off 1.88%. All right, a lot of interesting stuff, lighting it up to the light side or to the dark side. Carley, you are our guest. I will give you pride of place. Where should we begin our journey this week?
Okay, let's talk about grains.
The grains and to the ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody. Welcome to the tumultuous world of ags. You folks know where to go to find these reports for yourselves. CMEgroup.com/Twifo, TWIFO is the place to go. Once you're there, go into that drop down. And luckily for you, it's an alpha order list. So ags right at the top. Then we're going to go over one notch into the product family, going to go to grains and oil seeds. And then we'll hang out probably in Chicago wheat from there. But where we go from there is anyone's guess. Carley, what is lighting up your tape out there in the ags this week?
I've got my eye on wheat, Chicago wheat.
Yes, good old SRW wheat. What is catching your eye? What is lighting up your tape out there this week?
Well, the spread between wheat and soybeans is pretty dramatic. It's normally not that big of a discrepancy between the two. And so I think that at some point, something has to come back into line. Either beans have to come down or wheat has to go up or a little bit of both. I'm rooting for wheat on the upside. I think the fundamental story is supportive, and we're sitting right on trendline support, or at least we were on today's lows. The WASDE report helped us out a little bit, and we settled higher in Chicago wheat a couple cents. But I think that might just be the start of a move back towards $8. And if we can break above $8, I think we've got a chance at going quite a bit higher, maybe. I'm not saying we got $13 wheat in the cards like we saw last year, but if we could get $9.50, $10, I'd be ecstatic.
You have a lot of clients over there at DeCarley flocking into wheat to kick off the new year. Is that a hot trade?
Yeah, wheat's a hot trade. Unfortunately, most of us got in a little bit early, so it's not necessarily been the most pleasant trade. But I think with time, it'll work out.
It's no fun if you don't sweat for it a little bit, Carley, right? If you hit a banger right out of the gate, what fun is that? It's like you go to Vegas for a week and then you play a slot at the airport and you win, $1 million. I'm sure it'd be great. People will be excited. But then the rest of your trip, what are you going to do, right? So there you go. You want to sweat for it a little bit. It's no fun otherwise.
You got it.
You're a Vegas native, so that means nothing to you. You're just surrounded by slots all day long, 24/7 over there. I think I hear one in the background right now, Carley. I think you're beaming in from a local casino. All right, let's see what's lighting it up out there in Chicago wheat, listeners. How much paper on the tape this week? About 71,000 contracts out there. So a decent week out there for wheat, all things considered. Again, it is still kind of light kickoff to the new year, so we're not going to see a lot of rocking and rolling volume markets, probably for a little bit, but we'll keep our powder dry and see what's lighting it up out there. In terms of action, 41% of that 71,000 contracts is going up in the February contract. It has looks like about 15 days to go. We're going to hang out there. That is trading right now at about 744 and a quarter, up about 3/4 of a point on the week. If we go back, obviously, to the end of last week's show, though, it's off about 1.4%. Again, not a lot moving on the light side this week, listeners. In terms of vol, what is wheat vol? You might be asking right now. And it's about a 29 even. It's kind of unched on the week. It hasn't really moved. So a little bit frothier than your traditional equities, which, of course, VIX just hit a 19 handle. So you're talking 10 points above VIX right now. So a little bit more juice than you're going to see in the equities, but not blowing the doors off. It's not a nat gas or even a Bitcoin vol. Bitcoin has come in quite a bit as well, but still frothier than this out there. In terms of skew, the puts last week, 3% cheap. This week, 6.5% cheap. So the puts getting a little bit cheaper out there. The calls last week, 4.3% bid last week. This week, catching a little bit of a lift up to 6.3%. So puts getting cheaper, calls getting bid. We're seeing a reverse equity skew, more of a kind of commodity type skew, which makes sense given what we're seeing out here in wheat right now, especially with what Carley was laying down. If people are looking for a pop, makes sense. You might see a little bit of a bid forming out there for the calls. And speaking of the calls, that's where the action was this week. It was the 800 calls that were kind of evenly active across the board. We saw a little over 3,000 going up here in the Feb contract. The big day was Tuesday, pretty much half of that, 1,500 going up on Tuesday, 800 on Wednesday, 500 on Monday, and about 300 today. So back and forth opening to closing, but the busiest day, Tuesday, was opening. A little bit of action out there. This looks like about 3,000 total open on the week as well. So maybe that was all new paper piling in for the week, all opening. Interesting stuff. Then right behind it, we also have about 3,000 of the 800s also going up in March, pretty much exactly 3,000 as well. So intriguing stuff there. The big day for that, also Tuesday. Now, weirdly enough, they were opening both days, so it wasn't like they were rolling from February into March, which might be your first assumption when you see the exact same amount of paper going up in both. Could just be diving into a time spread out there. Again, 1,400 going up on Tuesday, close to 1,500. About 600 on Wednesday, 500 each Monday and today. And again, the OI is about 4,000 on March 800s here. So a lot of interest, a lot of action on the 800 calls. Let's see if we can find anything else out here. Listen, it looks like the 700 puts. So it's not all calls all the time. The 700 puts also in March, looking pretty active, doing about 2,400 contracts. The big day for those today, about 1,100 today, 900 yesterday. So that's your 2,000. The rest kind of scattered throughout the week, slightly closing earlier in the week. So maybe some folks moving away from the 700 puts as wheat is moving away from that 700 strike. Look really quickly. Also, the 700 puts doing even more paper. These would actually be the number 3 here in the February contract, doing about 3,000 contracts there. So right behind, just a few contracts behind the 800 calls. So 700, 800 risk reversal / strangle. Is that what's going up out here this week? The big day for those also Tuesday. So Tuesday, obviously the banger day here for wheat. Actually, no, take it back. 1,600 of those puts going up today as well. So today also pretty active on the 700 puts. 1,600 today, 1,000 going up on Tuesday, mostly opening there. And the rest, such as it was, scattered throughout the week. So, Carley, any of that's come as a surprise to you? 800 calls looking pretty active in February and March, as well as the 700 puts also in February, all doing about 3,000 contracts. Is that kind of what you expected?
Yeah, I mean, that's not shocking to me. I think on the call side, it's probably some speculators trying to play the WASD or just the fact that we're sitting on support. And on the put side, honestly, it's probably people hedging their positions. So anyone long futures, probably looking for some sort of a hedge going into the report, or, if you can imagine you're a farmer and you've got some exposure here, probably a little too late to start hedging now, but unfortunately that's sometimes what happens. Get a little nervous when things are struggling to hold the bottom. So I'd say those were hedge trades, but that's my guess.
Well, I mentioned lumber is our number one mover to the light side this week, up nearly 15%. Unfortunately, not a lot of options paper to really sink our teeth into out there. But anything else catching your eye in the ags complex this week before we roll on, Carley?
Nope, that's it for now.
That's it for ags. All right, then let's keep on rolling. I know you're a big fan of nat gas and everything energy, so let's head out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the world of energy out there. And in terms of action, like I said, we have heating oil and RBOB out there in our top 5. If we expanded it to a top 6, we would also have WTI. It was up about 7% on the week. So a banger week across the board for most energy products. I'll have to scroll a little bit to see if I could find where nat gas would line up. But either way, WTI and the rest of the energy complex are pretty active out there. Anything catching your eye out there in the world of energy this week, Carley?
Well, active is an accurate description. It's been pretty crazy. I've got my eye on natural gas. I think natural gas is probably putting in some sort of a bottom, but you know how gas is. It can be here or it could be 50 cents lower, and that's probably pretty good speculation if you can pick within less than $1 of the bottom. I think nat gas, I don't think we're going to see $10, $11 nat gas like we've kind of been accustomed to. I think it's more like $7 on the upside. But once we get past some of this liquidation this phase of liquidation that we've been struggling with, I think that prices start to move higher and maybe even double in price. So we'll see.
So you're looking at a little bit more upside action here in nat gas. I know in the past when you come on, you had a lot of bullish risk reversals and other fun upside plays going on in nat gas. What's cooking over there in DeCarley and nat gas right now? What's the hot trade?
So, well, unfortunately, we started advising clients to sell puts a little early in this, but I still think all in all, it's not the end of the world. We're just a little early. But if I were flat, I would say sell puts and buy calls. The calls are actually pretty cheap because we've run off all that froth. And, you know, I'm sure there were a lot of people burned buying those $10 calls for thousands of dollars. So they're going to think twice about spending money on call premium, which is nice for anyone trying to buy calls today. And the puts are expensive because, let's face it, we've been in free fall for a week. So it's a good time for bullish risk reversals.
Your customers won't get mad getting puts a little early, right? Yeah, get a little nat gas put to them early. There are worse things than that, Carley. You can turn around, write some calls against it. All kinds of fun.
The last year has been like that. It's just been a rough ride.
By the way, I do have to say how refreshing it is for you to come on and always admit when you tell people a little early or a little late. So many people are hitting us up all the time with their 8 million% gains, and they never have a loser, never have a down day. So it is always refreshing. Yeah. I always know to kick those people to the curb. It is nice to hear people giving us a straight talk here on the network, such as it is.
They might be paper trading, maybe. It's a lot easier when you're paper trading, right?
Exactly. Then nothing matters. And you never hear about them when the losers come. Those are ironically very, very strangely silent how that works out there. Let's go out here and see what the winners and losers we have out there in nat gas. Let's start with the volume side. Nat gas, kind of forgetting that it's an early start to the year here. They're putting up some numbers, about 430,000 contracts. So nat gas looking pretty much like a normal trading week out here from a volume perspective. And of that, the volume also pretty scattered, which is kind of interesting as well. Usually we see 30, maybe 40% of nat gas going up in one expiration, one contract. This week, it's kind of evenly spread. The slight winner is actually the front Feb contract with about 21% of the paper. We got 16% in March. We got 15% in April. So we got all the way out to May, 15% there as well, 10% in June. So we got a nice smattering of paper there in that front portion of the term structure, which is kind of interesting. And again, kind of shows maybe bit of a broad spectrum of opinion going up out there. We'll hang out in February for now and see where the road takes us. Where is nat gas hanging out right now? 372.20 or so. So maybe a little lower than you might have expected, kind of up slightly on the week. And like we said, since Monday, if you go back all the way to last week's show, it's up WTI is up about 7%. I don't have the exact number here. For nat gas, I'm sure we'll ferret it out here as the show keeps rolling. In terms of vol, again, nat gas looking frothy. I just mentioned that wheat at about a 29 is decent, but it's no nat gas hanging out right now at 106, almost 106 and a half, up nearly 6.4 handles. So a nice little pop here for nat gas vol when it was already looking pretty high already. And then in terms of skew, not the most shocking skew given how much vol and how much movement we're seeing out here. The puts last week about 0.3% cheap, so they were effectively flat. There was no premium either way to the puts last week. This week they're getting about 3% bid, so slight premium to the puts. The calls last week, 2.1% bid. This week, about 1%. So pretty much flat to the calls this week. So you're not seeing any crazy bias in either direction. I'm just going to scroll out a little bit to the rest of the term structure, see if that shape holds up a little bit further out. It looks like it starts to break down around April. The puts start to get pretty bid. 7% bid in April versus about a 5% discount to the call. So now we're starting to look like a cheap equity out there. And you get all the way out to May and June, you're talking 8% bid, 6% offered for the call. So the farther out you go in that front portion of that term structure, the more bid the puts are and the more offered calls are, which is kind of interesting out there. Maybe showing folks are looking for a little bit more downside before we turn around again out here. In terms of the most action, it was actually the two even puts. We thought we'd be talking about a 2-strike back a few months ago when all anyone could talk about were 7, 8, 9, 10 calls. And now we're talking about 2 puts for size. What a difference a few months makes in NatGas, listeners. A ton of paper going up in these, almost 13,000 contracts in the 2 puts. These are the ones going out here in April to the tune of nearly 13,000 contracts, 12,600. Most of that today, 8,000 of those going up today, 2,300 on Wednesday, 1,800 on Tuesday, only 500 on Monday. Back and forth, opening to closing. We obviously don't know about today's paper, but there are about 16,000 contracts open on this strike right now. So good chance it could be closing out there. And then right behind it, it's just a 2-put palooza here, listeners. 2 puts also here in May doing a little over 12,000 contracts as well. Once again, the big day today, almost 8,000. So maybe a bit of a roll going on there. About 2,600 on Tuesday. The rest kind of scattered throughout the week. Like mostly closing throughout the week. Obviously, again, we don't know about today, but also 26,000 of these 2 puts are open here in the May contract. So a lot of action here on the 2-put strike. Crazy time. Now, that's not enough, Carley, and maybe I think you'll like this paper a little bit more. We got some 5 calls lighting it up out here this week. These are in the Feb contract. These have about 11,400 contracts total on the week. So number 3 slotting in there. The big day for those also today. Today, a pretty active day for NatGas. Nearly 5,000, about 4,800 going up today. 2,800 on Monday, 2,600 on Tuesday, 1,100 on Wednesday. Seems like they were opening throughout the week. Again, we don't know about today, but with about 10,000 contracts open, it's anyone's guess what they were doing with these 5,000. Carley, I'm going to go out on a limb and guess that you like these 5 calls a little bit more than a bunch of 2 puts.
I do. I would prefer to buy the 5 calls. You did mention, I think you said February is the month, though. I'm not sure that's enough time. There's only about 2 weeks.
Yeah, just 2 weeks. They're betting on a big move pretty quick.
Yeah, I don't know about that. Maybe, but April, I think, is the place to be. The April is past the shoulder season, and so you get the April futures is trading a lot lower than February and March future because the market knows that winter ends and April's different weather scenario. So if I were going to buy $5 calls, I'd say go with April, but that's just me.
The Aprils are decently active too. About half of the amount of paper that's going up in February right now. About 5,000 versus 11,000 here. So a little bit less paper going farther. People want that high gamma trade in NatGas, Carley. They want to be in on the 5-strike right now. they want it for the next.
You know what? They're cheap.
Yeah.
They're only $300-400, and if it happens, heck, it'd be a nice day. So
there you go. Get that pop everyone's looking for, and you want it now. You don't want to wait. You don't want to wait till who wants to wait till April? Get it now. About 5,000 of the April 5s going up this week as well. The big day also today, 2,750, aka Carley's favorite strike here on the board. 1,300 on Monday, and the 500, 400 each, I should say, each the rest of the week. Looks like opening throughout the week. So a lot of opening 5 call traders out there in April. Intriguing stuff out there. Obviously going to cost you more to get more time, listeners, but you get a little bit more time for the vagaries of the NatGas market to move in your favor. Let's look here really quickly, see if we see any other strange and or aberrant prints. Looks like 7 calls also pretty active out there in Jan of next year, doing about 5,000 of these, 5,100 actually, 2,000 on Tuesday, 1,500 yesterday, and then 1,500 again today, all opening. So someone opening for size on the Jan 2024 7 calls. I'm looking here. I don't see any verticals or anything else. So just straight up opening. You like those a little better, Carley? 7 calls by next January, or is that maybe a bit too optimistic?
No, I think we're going to 7. I'm not sure it'll still be there by next January, but at some point between now and let's say middle of the year, I think that's a good bet.
Yes, January's a little late for the 7 strike. I was thinking the same thing. Maybe you want to go a little earlier for those, but hey, we shall see. Crazier things have happened in nat gas, certainly.
Absolutely.
So a ton of paper here, listeners, for a second trading week of the year here. A lot to sink our teeth into. Since we're hanging out in energy, and since it was technically our number 6, right outside our top 5 movers and shakers this week, we'll also hang our hat out there in WTI. I know it's a product a lot of you watch very closely for a variety of reasons, not the least of which how much it costs to fill up your massive cars out there, as my system wants to bog down with me here. We see what's going on out here in WTI. Carley, when your customers aren't slinging nat gas hot and heavy, what's letting up your tape and their tape out there in WTI these days?
So I've been bearish crude oil for quite some time, and believe it or not, I've actually flipped the script. I'm somewhere between around 70 to maybe even 65. I'm bullish. So we've tested 70 or low 70s a couple of times, and it's held. I think there's a pretty good chance we get one more flush out that would fully retest those lows, run some stops. That'll put us somewhere in the high 60s if it happens. But in any case, I think, let's just put it this way, crude's probably, it's no longer a sell the rallies kind of market. It's a buy the dips kind of market, in my opinion.
Interesting. So bullish in nat gas and bullish here in WTI. I'm getting a little bit of a bullish energy vibe from you, Carley.
You're getting that. That's true. Well, with the dollar getting just completely decimated, honestly, that alone helps support commodities. So then all it takes is a good fundamental story, and we could be off to the races.
All right, let's see what's off to the races here. If my system will play ball with me out here in WTI this week. There we go, listeners. Better late than never. WTI coming into the start of this segment, listeners, 78.5 out there, up nearly 5 handles, or about 6.3%, about 470 or so. That's how much it's up since Monday's session. Of course, you go back to the end of our show last week, it's up a little over 7%. So a nice little pop for WTI, still, again, below that very psychologically important 80 handle out there. How much paper going up in WTI this week? A little bit less than nat gas, 360,000 contracts out here. So a little bit light week for WTI. Usually expected to be a little bit north of the 400,000 level as well. In terms of that paper, where is it going up? It's in the Feb contract. Only has 5 days to go. 35% of the paper is going up out there. So folks trading WTI like an equity right now. They got to get in it right now. Only 5 days to go. If we go a little bit farther out, if we go to the March contract, that has about 25% of the paper as well. So maybe we'll look out there, because 5 days to go in crude oil. That is kind of close. We'll do a quick run through that contract. How about that, listeners? The vol out there, such as it is with 5 days to go, it's a 35, down 7 points, and not a ton of skew action out there. The puts are 3.5% bid this week. 3.8% cheap are the calls, up slightly in both directions from last week. But in terms of the March contract, the vol out there is about a 43. That's off about 3 points. And the skew hanging out kind of unched. Last week, the puts were 4.4% bid. This week, 4.3, so no real evolution there. The calls, 3.9% cheap. Last week, this week, 4.6% cheap. And in terms of the most active contract, it is actually the 70 puts in March, taking it by about 180 contracts this week. The 70 puts doing 13,880 contracts this week. In March, the big day was Monday, nearly 6,000, followed by 3,000 on Tuesday, 2,300 on Wednesday, 2,400 today. Opening all week long, so a lot of opening action here on these March 70 puts. You think we're going to retrace down to 70 by March, listeners, or perhaps you think we're going to bounce and you want to sell those? Either way, people are opening for size here on these 70 puts here this week, followed hot on its heels by the 80 calls going out in 5 days here in February. Those have 13,700. So you're talking about 180 contracts difference here. A lot of action in both. The 80 calls, the difference, though, the big day is today. Almost half of this paper, about 6,500 contracts going up today here, followed by 3,500 yesterday, 2,200 on Monday, 1,500 on Tuesday. Opening throughout the week. Obviously, we don't know about today's paper. So a lot of opening action on the 80 calls. Carley, what do you think about it? Maybe a 70-80 risk reversal out there in WTI. Does that bring a smile to your face?
Maybe that's what's happening. If I was going to sell puts, I'd probably keep the strike price under 65. But I think it's the right idea. I'd like to also probably do it on weakness, not necessarily on an upswing. But in the big picture, I think it's a good game plan, especially if we get a dip.
Let's see what else these folks are planning and what they're up to out here, listeners. Outside of the 80 calls, they are trading other contracts. Looks like the 75 puts also going out in 5 days, doing about 8,500 contracts. Again, the big day today. WTI lighting it up today. 5,000 contracts today, 1,500 on Monday, 1,500 on Wednesday. A scattered remnant on Tuesday. Looks like back and forth opening to closing throughout the week. Let's go a little bit farther out, see if we see any other interesting and or aberrant paper. How about the pars, listeners? The par calls. How's that float your boat? These are going up. Let's see. Where are these? These are out in June. Doing about 5,000 contracts this week. The big day was Tuesday. Close to half. 2,200 on Tuesday. 1,500 on 2,200 on Wednesday. 1,500 on Tuesday. 1,300 today and a handful on Monday. So the par calls, I don't see any other verticals or anything else really going up with those. So could be just a straight up par calls. Thankfully, I also don't see the ridiculous 1 point wide verticals that were dominating all the WTI paper for months. That paper seems to have gone away, at least for now, which I am thankful for because it was a lot of noise signifying nothing at the end of the day out there. So intriguing stuff. Par calls, an interesting strike. You like those, listeners? Par calls by June expiration. Someone's putting those on to the tune of 5,000 contracts. All right, Carley, we touched on ags. We touched on energy. What else is lighting up your tape out there? Where should we head next?
Currencies?
FX. Look at you going deep. All right, to the land of FX we go.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, listeners, welcome to the wonderful world of FX. That's a drop, and this is a report we don't really get a lot of chance to sink our teeth into here on the show because, quite frankly, FX doesn't blow the doors off all the time. Lately, the last couple of months, we have seen it pop up on our radar a few times. Sometimes in days like today, where one half of our graph is just very light and then manages to sneak in, like the Swiss franc did this week. The Swiss franc makes it into our dark side at number 4, off 0.75%. So intriguing stuff there. And again, the Swiss franc, before you get too excited, listeners, only 2,999 contracts off the tape. So not a ton to parse out here, but we can't hang out here. Carley, what is catching your eye out here in the world of FX this week?
Well, I'm watching the euro. It's coming up against some significant technical resistance around 109. My guess is the majority of market participants think that's going to hold and we roll back over, dollar up, euro down. But I don't think so. I think we've probably put in a long-term bottom in the euro. And I think at this point, we've got quite a bit of room to go. My first upside target going into later part of the year is going to be about 115. And then I think we could see somewhere in the 125, 130 area by next year. I know it's hard to believe, but it's doable.
And have you seen, obviously, the strong dollar making a lot of headlines out there these days, and as a result, having a lot of reverberations throughout the FX space. Have you seen a lot of clients start to gravitate towards FX over the last 6 months that maybe normally wouldn't be interesting because it's kind of a sleepy segment, but all of a sudden, because of the action in the dollar, they're starting to pay more attention? Have you noticed that over there at DeCarley with your clients?
Actually, us and our clients were kind of paying attention to it before fireworks started happening. Probably started paying attention too soon. Like we were trying to buy cheap calls in the yen and the euro before it turned, and eventually it finally did. But it took some time and some effort for that to happen. But the currency market's interesting in that, like you said, it can be a sleeper for a long time, but then suddenly it's not, and things can start moving. And it's a really nice place for people that are buying options outright. Like if you want to be an option buyer, not have to worry about the stress of selling or spreads or anything of that. Just keep it real simple. A lot of times you can buy relatively cheap options in currencies. And if you happen to pick the right direction and something, some event triggers a move, you may be in a pretty good spot. So.
And obviously, it's the most active pair out there, the Euro USD. Is that what you recommend most of your newcomers to FX? Is that their starting point?
Sure. Yeah, absolutely. Euro's the one that would be probably on the first on the list. The yen is pretty liquid and it can move as well. In most circumstances, probably would just ignore the yen. But with we're in interesting times. There's weird things going on, so the yen's probably on most people's radar. You want to stay away from some of the real obscure stuff that you see listed out there. I mean, we get a lot of people that want to trade like the Chinese yuan and things. No, just forget about it. You want to stick to the euro, the yen, the British pound, maybe the Canadian and the Aussie, and leave it at that.
You start trading some of that obscure stuff, and you are going to be the open interest. So enjoy having no counterparties and just wearing whatever you put on until expiration. But
exactly.
Intriguing stuff. Let's see what's going on out here in the old Euro USD. Decent amount of paper this week, listeners. 70,300 contracts coming into the start of this segment. Where is the Euro USD hanging out? Almost 109, 1.089 to be precise, up about 0.02 on the week, or about 1.8% there. And in terms of that 70,000 contracts, where is the lion's share going up this week? It's going up in the March contract, has about 50 days to go, 27.1% going up out there. So I suppose we'll hang our hat out there, listeners. In terms of vol, that's been always the Achilles heel of the FX space, why a lot of people tend to stay away from it, just because you don't really see the vol levels out there. We're talking about a little bit shy of a 9 out there in the March Euro USD, about 870, and that's off about 0.15 this week. So the vol kind of light out there. In terms of skew, we're seeing the puts a little bit bid, 3.1% bid last week. This week, catching a little bit more of a bid, about 5.7% bid. And in terms of the calls, not much to speak of, 0.6% cheap, so pretty much flat last week, and they're about 1.3% cheap this week. So slightly cheap, but then again, nothing to write home about. The bid is clearly, such as there is bid there to the puts. And in terms of the most active contract this week, it looks like it's a pretty close race, but the winner is the March 1.09 calls, doing nearly 10,000 contracts, 9.7 thousand contracts out there, and almost why we love FX. All of that pretty much going up today. There's 9,681 going up today of 9,722. So somebody is really liking the 1.09 calls today to the tune of nearly 10,000 contracts. I'm looking here. I don't see any other verticals or anything like that. So OI wise, there's only 5,200 contracts. So this is clearly opening paper here on the 1.09 calls in March. Maybe a bit of a rolling action, because it looks like the 1.065 calls are also pretty active in January. Those have about 3/4 of a day left to go. I'm sorry, those are the puts. So they probably wouldn't be rolling those. Even though size-wise, the OI, again, it's the same deal. The 1.065 puts, almost 8,000 contracts going up today. That's pretty much as the total for the week. About 8,300 total have gone up this week. So today, a lot of action here in the Euro USD. The OI is also about 7,600 contracts, so that could be closing paper, in which case I don't see the opening leg of it unless they're doing less, unless they're rolling to the calls, unless they've changed the script entirely. But intriguing stuff here, also worth noting the 1.075 puts going up here in the week. Looks like these are the week 3 Jans. These have about 2,500 contracts going up. No OI, looks like all opening today. So maybe the 1.065 puts doing a little bit of a losing money roll, taking off 8,000 and then putting up 2,500 again today. That could be happening as well. Either way, today is the day of action out here for the Euro USD list. Let's look anywhere else really quickly, see if you see any other interesting and or aberrant prints a little bit farther out, all the way out to September, actually. The 1.02 calls, again, also printing today. I don't know what's going up with just today. I know obviously we had the CPI and inflation numbers this morning, but the fact that we're seeing so many strikes very active today and then not even one other contract the rest of the week. Usually you might see at least a smattering of paper throughout the week. We're seeing nothing. And then in the case of these 1.02 calls in September, 3,640 contracts going up. which also, as it happens to be, matches the OI exactly. So it seems like somebody's closing here in the 1.02 calls in September, even though they still have 2,400 days to go. So intriguing stuff out here. Carley, any of that come as a surprise to you, what you're hearing out here in the Euro USD options this week, Carley?
The timing is a little surprising, but the strike price is not. If anyone looking at a monthly chart can see that monthly support was right around 109. And earlier in the year, we broke through that as we were dealing with all the Russia-Ukraine and the inflation and all that kind of stuff that came with it. Had all that stuff not happened, we probably wouldn't have broken 109. But so it's supportive on the way down. We melted through, and now we're on the way back up. It's going to act as resistance. And so I think that's a pretty significant pivot number. If it breaks above that, though, I think we get a massive short squeeze. So it'll be interesting.
All right, we're kind of coming up again, so we have time for one more product category here. I'm just scanning the movers and shakers to see if there's anything there that we haven't sunk our teeth into in a while. And copper is there at number 2 to the light side, up 9.75% since our last show. So I think we'll head out to the metals next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody. Welcome to the metals here. Scroll all the way down, almost to the bottom of that asset class. Second from the bottom, right above vol indices, you'll see metals. Usually we hang out in the precious stuff. That's your gold, your silver, all your shiny stuff. Today we're going to scroll down a few in the product family, easy for me to say, product family, to the base metals. Then we're going to go to copper. Carley, copper is lighting it up on our tape this week, doing some decent paper this week as well. Nearly 65,000 contracts on the tape for copper. So nothing to sneeze at. Do you guys see a lot of action in the base metals over there at DeCarley?
Yeah, we're starting to see quite a bit of interest. I mean, if you look at the dollar chart and then you look at the copper chart, it's pretty easy to see that what's going on in copper is just basically a repricing in currencies, or at least that's some of it. It's not all of it. The copper rally, in my opinion, has probably gotten a little long in the tooth. So although I'm bullish copper long run, I think in the short run, we're probably due for a decent sized pullback. So I wouldn't be surprised if people aren't starting to look at some puts here.
Look at a few puts ourselves, and maybe some calls too, if we can be so inclined out here. How much paper? Like we said, 64,000 contracts going up in copper this week, so nothing to sneeze at. And of that, about 35% going up in the March contract that has 42 days to go. So we're going to hang out there. Where is copper right now? 4.16 out there, up about 0.25 or about 6.5% on the week. And again, if you go back to last week's show, it's up nearly 10%. In terms of vol, it's at about almost a 30, 29.85, off about exactly a point on the week. So kind of in line with wheat vol, about 10 points above VIX and equity vol, and obviously about a third of what we're seeing out there in nat gas vol. In terms of skew, not a heck of a lot going on out here. We're about 1% bid last week, 2.2% bid in the puts, and the calls about 1% bid last week and about 0.6%. So pretty much flat this week. So no huge bias in either direction. Slight bias to the puts, but nothing crazy out here, listeners. In terms of the most active contracts, what was lighting it up out here this week, listeners? It was the 4.5 calls in March leading the dance with about 6,200 contracts. The big day today, 2,500, 2,300 yesterday, 700 on Tuesday, and about 600 on Monday. Closing earlier in the week, opening later in the week. We don't obviously know with today's paper. And then right behind it, we also have the 4.5 calls going up here. There we go. In April as well, also pretty active, doing about 4,200 contracts this week. So it would be strange doing a March-April straight-up roll, obviously. Maybe it's a bit of a time, but it doesn't look like it traded that way because we're seeing the paper more evenly spread out in the 4.5 calls there in April. They traded 1,400 today, and then about 1,000 each Monday and Tuesday, and about 800 on Wednesday, opening throughout much of the week. Looks like it might have actually been a 4.5 vertical going up because the paper lines up pretty nicely. It's exactly the same today, 1,435 each for the 4.5s and the 5s. So 4.5 verticals in April, trading almost 1,000 times on Monday, almost 1,000 times again on Tuesday, about 800 times on Wednesday, and 1,435 times today. So opening on both. Intriguing. So 4, half, 5, kind of a tight vertical, but then again, it is copper. That's actually not a bad spread in terms of width when you're talking about copper. So that also explains some of the volume numbers we're seeing out here. People liking. Let's go back to the March as well, see if there's any vertical action. And not really. It doesn't really line up that way at all. It was pretty much all Wednesday and all today. 2,500 today, 2,300 Wednesday, and that was the rest kind of scattered throughout the week. So no vertical action, just straight 4 halves trading in March. Either way, 4 half, the strike du jour out there. Let's go a little bit farther out and see if we can see anything else. Let's go out to June. The 5 half calls also pretty active out here, doing about 3,000 contracts. The big day was Wednesday, 1,700, 1,100 today, and then not much to speak of the rest of the week. Looks like a 5 half, 4 half vertical might have been trading on Wednesday as well, 1,200 by 1,700 times. So a bit of a ratio there. Either way, intriguing stuff afoot here for copper. Copper always seen as very much a surrogate for what's going on in the Chinese demand out there. But either way, this is a product we've watched grow over our time on the show. When we first started doing the show, copper really didn't do much options paper to speak of. Then it got up to about 10, 20, into the 30,000, now pushing almost 70,000 contracts. So if you've been leery of copper in the past for whatever reason, maybe it wasn't liquid enough or didn't intrigue you, maybe these numbers are enough to intrigue you. You know what always intrigues us, though? It's your questions and your comments, listeners. Let's get to some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback segment, the portion of the show where you folks ask us questions. We also turn the spotlight back on you with our own polls and our questions of the week. Carley, it's that time of year we like to gauge the broad sentiment of our audience. So it's time for our annual pick your product category, pick your call on said product category question, listeners. We asked you if you had to buy a 10% out of the money call expiring at the end of the year on one of these following markets/products here, which one would you choose? Gave you 4 choices: SPY, SPX, so your broad equities, Bitcoin, so obviously your crypto, WTI, so you kind of energy/commodity segment, or VIX, so volatility itself. Carley, what is your choice in that poll? And then B, more importantly, what do you think our audience is voting for?
I would choose SPY, SPX, and I'm guessing the audience is probably going to choose WTI crude oil.
Not a bad guess. They actually came in for, they agreed with you. They chose SPY, SPX as well, 43.3%. This poll just ended a little while ago. We had a tie for second, which was weird. 24.4% each for WTI and VIX. So a little bit of a fight between vol and crude oil. And then no love for Bitcoin, Carley, only 7.8%. So no love at all. I mentioned the numbers, how this shook up for us on the network last year. You guys are more bullish than you were last year. It was roughly a third of you choosing SPY, SPX this time last year. This year, up to 43%. So, and also about half the amount of interest in Bitcoin this year as there was last year. Last year, we were around 14%. This year, 7.8%. So intriguing stuff out there. WTI and VIX were both about the same, somewhere in the 25 to 27% range. So those two didn't really change, but a bit of an uptick. Looks like all you folks who abandoned Bitcoin all moved pretty much into SPY, SPX. And Carley, I can't let you get out of here without playing along with our volatility game as well. And our Volatility View show every year, we always have a lot of our listeners and our guests and our co-hosts play along and attempt to predict where vol, aka VIX, will close at the end of 2023. I'm going to cheat. I'm going to give you a little bit of an extra bonus because you get to guess a week or two after everybody else did. So you get a couple extra weeks in your back pocket worth of analysis. But if you had to play along in our crystal ball game, where would you say VIX is going to close at the end of the year?
I'm going to say 13.
Wow. 13 even? They're just coming for it. Mike, well, we are at a 19 right now, so I guess that isn't that far. But wow, man. According to Carley, look out to the end of the year. Snooze fest. They are coming.
Hopefully.
They are coming for a vol. Wow, interesting. So, Carl, I think you, at least of all of our contributors and guests and co-hosts on the network, you might have pride of place of having the lowest guess right now, which is interesting. That would be interesting. Selfishly, maybe I hope it doesn't get there, just because I remember those dark days of 2017 where we hung out between 9 and 12 for the entirety of the year and nothing really happened. So, I mean, we could all use a bit of a break from the mad markets, but I don't know if 13 might be a little low, but I guess we'll see. What do you think about that, listeners? 13 in VIX by the end of the year. You agree, disagree? Most of you already voted in our poll. It has closed. But if you want to get a couple late straggler votes in, you agree with Carley, disagree? Hit us up. Let us know. All right, listeners, that music means we have come to the end of another fun sojourn through the world of all things futures, options. Carley, before we go, if our listeners want to check in with you and the folks over there at DeCarley, where should they go? What should they do?
Okay, check out our website. It's DeCarleyTrading.com, DeCarley trading.com. You can also check me out on Twitter at Carley Garner.
There you go. She laid it all out. DeCarley.com, or check her out on Twitter at Carley Garner. Always putting out a lot of fun nuggets there in between appearances on this program. And of course, you know where to go. Check out all these reports we're crunching for you all the time because we like you. CMEgroup.com/Twifo, TWIFO is the place to go. And of course, if you want to go above and beyond just those free versions of the Twifo report, you want to check out the correlation, the pace of the roll, all the other legion of tools they have available. Only one place to go. Bantix.com, BANTIX.com is the place to go to kick the tires and light the fires. That is going to do it for us today on the network. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. We'll put Carley's VIX prognostication into the hopper, see how it shakes out there on the show. I think we'll be joined by Mr. Jim Carroll, Mr. @VIXologist, for his first appearance here of the new year. Then back after that for all you pro folks with some unusual activity fun with options oddities. Then, of course, we're off again for the network on Monday, listeners, and all the way back to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.